Welcome to the weekly market recap with SC Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. Sri Lanka's construction sector is gaining strong momentum with activity expanding across key projects. According to the latest Purchasing Managers Index for construction, the total activity index rose to 61.1 in August. This marks a continuous expansion in the industry. Survey responses pointed to an increase in project availability along with the restart of several previously suspended projects. These factors have boosted sector confidence. The new orders index also recorded growth. Road development and water supply projects were reported as the most frequently awarded contracts during the month. In addition, both employment and the quantity of purchases increased in August. This reflects optimism that construction activity will continue to grow in the coming months. However, suppliers' delivery times became longer. Analysts attribute this to the surge in demand for construction materials. Overall, the data indicates positive momentum for Sri Lanka's construction industry, though rising demand pressures are beginning to stretch supply chains. The country's condominium market is entering a new phase of rapid growth as buyers rush to secure units even before construction is completed. According to the central bank's latest condominium market survey, prices in Colombo surged by nearly 13% year-on-year in the second quarter. The index value now stands at 271.8. Despite the price rise, demand has remained strong. Sales volumes across Colombo and other major cities rose more than 44% compared with a year earlier, though slightly lower than the previous quarter. The highest number of transactions was recorded in Colombo, followed by Gampaha and Kalutara. Together, these districts accounted for almost all condominium sales. Smaller shares came from Galle, Kandy, Sigiriya, Nuwara and Nila Valley. Within Colombo, half of the sales were from single condominium projects, while mixed developments made up the balance. In Gampaha and Kalutara, sales from single projects also dominated at 48%. By price category, nearly half of all transactions were in the 25 to 50 million rupee range. The luxury segment above 75 million rupees also showed notable growth compared to earlier in the year. Survey findings reveal that most sales came from completed projects. However, more than half of the units in ongoing projects have already been reserved, showing the continued appetite for early investments. The data highlights a sharp recovery in Sri Lanka's vertical living market, with buyers increasingly confident in long-term urban and suburban demand. Global ratings agency Fitch Ratings has affirmed Sri Lanka's long-term foreign currency issuer default rating at CCC+. The agency explained that the rating continues to be weighed down by high government debt levels and a heavy interest burden, even after the completion of debt restructuring in 2024. However, Fitch noted that Sri Lanka is showing solid signs of economic recovery. This progress has been supported by structural reforms, low inflation, fiscal adjustments, and a stronger external finance position under the ongoing 48-month IMF program. Among the positive steps highlighted are the approval of the 2025 budget in line with IMF targets, the restoration of cost recovery pricing for electricity, improvements in tax compliance, and reforms to the Ceylon Electricity Board and other state-owned enterprises. The Central Bank of Sri Lanka has also refrained from printing money to finance the deficit, while the Public Debt Management Office is expected to become fully operational by January 2026. Despite these improvements, debt levels remain a concern. Fitch projects government debt to remain near 96% of GDP by 2027, well above the median for similarly rated countries. Risks could increase after 2027 when payments on new macro-linked bonds are expected to rise. On the fiscal side, Sri Lanka has made progress. Fitch estimates a primary budget surplus of around 2.7% of GDP between 2025 and 2027, compared to a large deficit just a few years ago. Tax revenues have grown strongly, up 28% year-on-year in the first 7 months of 2025. Turning to external finances, foreign reserves have risen to about 6.2 billion US dollars compared with only 1.9 billion in 2022. Fitch expects reserves to increase further, covering about 2.8 months of external payments. The current account is also forecast to record a surplus in 2025, supported by remittances, tourism, and services receipts. Meanwhile, the economy has rebounded from the sharp contraction of 2022 and 2023. Growth reached 5% in 2024 and is expected to come in at 4.4% in 2025. Fitch sees growth moderating slightly to around 3.6% by 2027, with inflation expected to stay close to the central bank's target. Finally, Fitch highlighted governance as an important factor in the rating, noting Sri Lanka's record of political stability, rule of law, and moderate institutional capacity. Sri Lanka's tourism sector has reached a historic milestone. The country welcomed 158,971 tourists in September 2025, the highest ever figure for that month. This surpasses the previous record set in 2018 and marks a 30% increase compared to the same period last year. According to the official data, the growth was overwhelming, driven by India, with nearly 50,000 Indian tourists arriving in September. That accounts for almost a third of total arrivals. The United Kingdom and China followed as the second and third largest source markets. From January to September, Sri Lanka has recorded a total of 1.7 million tourist arrivals. India continues to dominate with more than 375,000 visitors, followed by the United Kingdom and Russia. With this strong momentum, the tourism industry is now looking ahead to the government's target of 2.6 million arrivals for 2025. To meet this goal, the country must attract around 875,000 tourists in the final 3 months of the year, an average of nearly 292,000 arrivals per month. Analysts note that this will be a tough challenge since even the best performing month so far this year, January, saw just over 252,000 visitors. For comparison, the final quarter of 2018 brought in about 602,000 tourists, while 2024 ended with about 569,000. Despite the hurdles, Sri Lanka has been enjoying a wave of positive international publicity. The island was recently named the #1 travel destination for October by the global magazine Time Out. In addition, it won recognition as a leading MICE destination and leading wellness destination at the South Asian Travel Awards 2025. Industry experts say this free publicity has boosted the country's global visibility. But they also caution that attracting the right mix of tourists will be just as important as hitting the numbers. Let's take a look at this week's Treasury Bill auction results. With the recent Treasury Bill auction, the 91-day TB rate stands at 7.53%, down by 4 basis points, and 182-day TB rate stands at 7.89%, and the 1-year TB rate stands at 8.02%, showing no change compared to the previous week. Thank you for watching. We'll be back next week.